Hi everyone, welcome back to the channel. Today we're going to be tackling a big topic, how to calculate sellers' discretionary earnings, or SDE as it's commonly known. When you're looking at buying a small business, this is crucial because if you don't know this figure and if you haven't calculated it properly, you'll be getting the cash flow wrong. So let's dive in. First off, what is SDE? It's the money that the business makes that could be available to you, the new owner. It's different from net profit, which often is kept low for tax reasons. SDE gives you a clear picture of the business's earning power. Hi, I'm Trent Lee. I've sold over 600 businesses, and in the last 5 years in a row, I've been named the #1 business broker in the country for the most closed transactions every single year. And I make these videos so that one day you'll want to hire me to help you value, sell, or buy your business. So let's dive into this. Information that you'll need. Before you get started, gather at least the last 3 years profit and loss statement, the current balance sheet, as well as the balance sheet for each of the previous years, the lease or real estate details, the owner's salary and role in the business, family members who are employed in the business, a list of operational expenses, major equipment list, and any unusual events like lawsuits or big purchases. Start with that basic information. Next, you need to ask yourself 4 questions. Ask yourself, do I understand how this business works? Can the business be run without the current owner? Is the business too dependent on one customer or supplier? What am I actually buying? Don't move forward until you can answer these questions clearly and accurately. Now, here's a couple of quick checks. Let's look at the most recent profit and loss statement. What is half of the total revenue? Keep that number in mind. Now, let's look at the balance sheet and the equipment list. If the total value of the assets is higher than half of the revenue, the business might be more valuable as being sold off in pieces. Just a quick sanity check. Now, let's find out the SDE, or seller's discretionary earnings. Start with the net profit of the most recent year. Then, what you want to do is make these following adjustments. You want to add in owner's salary and benefits, family members' salaries, one-time expenses, interest, taxes, depreciation, and amortization. Then you want to make sure that you subtract out the market wages for the family members who work in the business, non-core income like interest or equipment being sold off, one-time revenue that may have boosted the overall net profit, upcoming rent increases that you need to factor in, as well as deferred maintenance. Now, repeat this for the last 2 years to see the trends over a 3-year period of time. Next, you need to weight the seller's discretionary earnings. You'll likely have 3 different SDE numbers for the last 3 years. Now, you need to decide how much weight are you going to give each year. If the business is growing, you might focus on the most recent years being heavily weighted. If the business is stable, you might average all across 3 years evenly. If the business is trending down, though, I would highly recommend you put the highest weight on the trailing 12 months if the trend is going down. Choosing a multiple. Now, multiply your weighted SDE by a multiple to get the business's value. This is often called a going concern valuation or a fair market value. The multiples can vary. If the SDE is under $100,000, it might be a 2 multiple or less. If the SDE is between $100,000 and $500,000, it might be between 2 to 3.5. If it's above $500,000 to $1 million, you might be in the 3 to 4.5 range. Whatever you do, work with a professional, a business broker, or an M&A advisor to understand the industry and apply an accurate market multiple. Industries and size can change, so make sure you have a professional on your team who can come in and help you determine the true multiple to use. Business brokers and M&A advisors have access to databases of done deals or closed transactions where we can look up exactly what the multiple is that you should be using for your industry and the size of business. Next is a sanity check. Finally, think like a buyer. Can a new owner make a living, pay off the loan, and have some cushion left over after all the operating expenses? If not, your valuation might be off. You need to make sure that it falls under at least debt service ratios that are adequate for a bank to approve a loan on. Something above 1.3 to be conservative. And there you have it. You know how to calculate the SDE and how to make a smart choice when it comes to buying a business. If you found this video helpful, like it, subscribe it, follow me on some other videos where I walk through how to value, sell, buy the perfect business for you. And if you're considering selling your business, the first step is to find out how much it's worth and how long it will take to sell, just like we went through on this video. I'll make it as simple as possible. As a business appraiser, I will do a free business valuation and market assessment to tell you exactly the fair market value of your business and how long it will take to find a buyer. And here's the best part. I'll never ask you for a penny up front. I only get paid when I find a buyer who has made an acceptable offer and you're happy with, and we close the transaction and there's money in your account. My success is completely dependent on doing what I say I can do. There's no obligation or commitment on your part. Thanks, and I'll see you in the next video.